So it's a pretty simple strategy. Uh, I'm usually on the euro yen with this. I have it on the side while I'm trading oil. I just kind of keep it off to the side. I really only look at this pair. Sometimes the euro dollar as well. But it's pretty simple. It uses a 7, pardon me, a 7 exponential moving average and the 2-line MACD and range charts. And these are set to 8 pips. So all this stuff, all the 2 indicators here, other than the MA, of course, you can get that with any MT4 platform, but the range charts and the 2-line MACD you can grab from the blog, and most of you already have that. So if you don't, you can go there and get it. Actually, it's in the forum as well, which again we'll get to. So what are we looking at? The main thing I'm looking for is the first thing is the cross of the MACD. So is the blue crossing above the red, or is the blue crossing below the red? Let's look at this example here. The blue is crossing above the red for the first time. That's got me interested. And then I want to see some price action. I want to see, because it's crossing above, I want to see green bars. And I don't want to see them side by side like this. I want to see them green, green, separating from each other, going up, going up, going up. And then I want to see a pullback. Okay? And then the pullback, I want to see if there's a close below the 7. Okay? So in this case, it did, but I'll just check with the, pardon me, the data window, and 74 and 73. Yep, so it closed below. So perfect. That's what we want to see. At the same time that this closes below, the blue stayed above the red. That's very important. If the blue crossed back over the red, then this trade's negated and we continue on looking for a fresh new setup. Okay. Now I'm just going to go over the long example. You can obviously figure out how the inverse would affect the short trade. So that matches up. We've got a close below. This stays above. Great. Now we want to look for an entry. So we have the pullback, not just to the 7, but an actual close below the 7. And then we want to see a close back above the 7. And in this case, it happened to be the very next bar, which is great, although it doesn't look like it. But if we look at the data window, we see the MA is 74, and the close of that bar is 75. So it did close by 1 pip. So that means we can get long on this bar here at the open of this bar. So we can get long right there. Okay. Now, it's a scalping strategy. This had a run of jeepers 40, almost 50 pips, a little pullback here, but I'm not looking for that. It's a scalping strategy. I'm looking for 10, 8, 10 ticks kind of thing, and I'm looking for a stop loss of about the same. So in this case, I'm looking to protect down below that swing low, and that's my stop. And I'd be looking to get out somewhere up here. Okay, if we get in at 76, I'm looking to get out at 86 and protect down to 66. Okay, give or take, add a bit of spread, take some spread off. But you get the idea. And not all the time. I'm not expecting this big run. It happens, sure, but I'm not going to sweat, leaving that kind of money on the table, because that's not the trade I'm looking for. And that doesn't happen all the time. Now, one thing I have noticed is you've got a higher percentage when this happens, when this setup happens shortly after that first cross. Okay? And I'll show you what I mean, because we have another trade up here. Okay, so we're going up, we get our first close below, right? It closes back below, all above, all the closes are above the 7 here, above. We get one below, we go down to the MACD, it's still above, the blue is still above the red. We get a close back above, which means we can then go long, on this candle here. Move that over so you can see. So we could go long here. And again, same thing. Looking to protect below there, 10, 11. and we're looking for 10.11, which we would have got. Okay, so I prefer these ones that happen right after, like right after that first cross. That's kind of, I've been finding that's kind of more of the sweet spot, a more high probability trade. So you might find, depending on which pair you're looking at, that might be a little different, but keep an eye out for that, and at least make a note of it as you go along and test it. So that's it. That's basically the strategy. It's pretty simple. And I'm looking at the euro yen. Holy cow. Okay, so here's I also have the euro dollar up beside it, and this is like the picture perfect trade, because the price action is obvious, right? All this red, nothing but green, and then all red down. So let's go through this trade again. We get a cross here of the blue to the downside. Now we're looking for this pullback and a close above. Well, it closed above here, right? Does it? Let's see. The MA is 65 and the close is 66. So yes, we get a close above here. It goes up still. We still haven't broken. The blue still hasn't crossed. So we're still able to look for a short. Now, does this one close below? It doesn't. It closes right on. Look at that. 66. Both the close and the MA are at 66. So we can't get in here. But this one does close below. Obviously, it's pretty obvious. 62 and 65. So we can get in on this one. Come on. There. So we can get in there. And take that short. To where here's we get our 10 ticks. We protect back up above here. Right, and there's 10. Give it 12. So take 12. And we could have gotten our 12 easy. Wow. But that's a picture perfect. I didn't see that. I was setting up for the euro yen because that's what I usually trade, or usually look at, more so than the euro dollar. But this euro dollar one is just a perfect trade. Like, there's that price action we're looking for. Pulls back, close above, close below, continue on, and this never breaks. This never crosses back over. That's a perfect setup. Perfect, perfect, very cool. Okay, so that's the strategy.